Back now to the trade war between the US and China. Stocks on Wall Street have plunged, with losses on Nasdaq exceeding 3% after China announced new tariffs on US imports. I'm joined now from Boston by Matt Maley, a senior market analyst. Thank you very much for joining us here on TRT World. So why have stocks crashed and why now?
Well, we had a combination of things here. First of all, even before this news came out, last week about this time, over the previous weekend when President Trump announced the potential tariffs, was that the stock market already rallied 25% in just 4 months and was getting a little overbought. Plus, we saw some cracks in one of the key leadership groups, the semiconductor stocks. They were starting to roll over a little bit, and we had some negative news on their earnings. And then when you added this new negative news into a situation where the market was probably already ready for a 3 to 5% correction, now it looks like it could be more of one, and it just gives us so much more uncertainty than we had just just a week and a half ago when the market was kind of priced for perfection.
And Matt, which American companies will be affected by these tariffs?
Well, the thing is, early on, we have to worry about, of course, the multinational companies. And you think about, of course, like a Boeing and a Caterpillar tractor and names like that. But, of course, we also have to worry about the technology shares. They were already seeing some issues there, but a lot of the supply chain goes through China. So that creates a problem. But the one thing that we're looking forward, and we won't know this for a little bit while, of course, will be what will the impact have on the consumer? Because unless the companies really pass on the higher costs of the tariffs to the consumer, they're going to be paying more. Does that create them or cause them to pull in their horns a little bit? And of course, we're a consumer-driven economy in the U.S. That would be another negative. But again, that'll be a ways away before we've reached anything on that area.
And how much of an impact are you expecting on the American economy?
Well, the one thing that really hurts is that the economy probably doesn't hurt it as much as maybe some people worry about. But what does it do to what were people expecting? And what was the stock market expecting? The stock market was really expecting a nice pickup in the second half. And one of the reasons behind that was that we were hoping for a good deal. And it wasn't just, a deal being signed before the end of this, certainly by the end of June, if not by the end of May. The problem that it has is not just what happens with the consumer and what happens with higher tariffs, but it also creates a problem with business leaders, business executives, and how much money they're going to spend. If there's a lot of uncertainty, they're not going to invest in their own companies. In other words, capital spending won't help the economy do better. So it should lead to a slowdown in the second half.
Well, thank you very much for that, Matt Maley.